4, 3, 2, 1. What's going on, everybody? Welcome to the aXpire podcast. I'm super stoked. Today we have with us Rob Breedlove and Volkan Salar, who's the CEO and COO of Parallax Digital. First of all, guys, welcome to the show. Thank you so much for joining us.
Thank you for having us.
Beautiful. So, guys, can you tell us a little bit about what you're doing, about your background, and the thesis behind what you're doing now at Parallax?
Sure. So my background, I have a traditional accounting education. I have my master's in finance and accounting from the University of Tennessee. I spent a number of years on the linear career path as a CPA, as an entrepreneurial services associate, handling tax strategy for high net worth individuals. I then struck out on an entrepreneurial path. I was a CFO for a construction business for a number of years. I was a CFO of Skywire, which is a hospitality technology company based out of Las Vegas and Vancouver. And then most recently moved to Santa Monica to start Parallax in early 17. I had been studying crypto assets individually for a while. And I remember being in Costa Rica in 2014 and having an argument with a banker. And his position was that digital currencies were absolutely, certainly never going to happen. Right. The position was that they were inevitable, like definitely going to happen. And at the time I had been investing in Bitcoin a little bit, but for whatever reason, I didn't look deeply into it. I hadn't had the light bulb moment or gone beyond the event horizon, as some people say. And that moment for me came in late 16, early 17, when I was studying Ethereum. Looking at Ethereum when I realized, looking at smart contracts specifically, realizing that the entire finance industry, global finance industry, is a smart contract with human beings on top of it. This was my light bulb moment. I made heavy investments into the space at that time, and most of the larger market cap weighted crypto assets. And then 2017 happened. It was an incredible bull run for a lot of people. A lot of people looked like geniuses at the time. And we were one of the many hundred of funds that launched in that year. Since then, we have also tried to diversify our operations a bit, and that we don't want to be solely exposed to what we call the Bitcoin thesis, which is essentially, Bitcoin is the hardest form of money that's ever existed, and we can go into more detail about that later. Mm-hmm. And we think that over the long run, it outcompetes all other forms of money. So that's about a $100 trillion market driven by Bitcoin. Possibly spurring some other markets and technologies around it, but Bitcoin would be by and far the large winner in that space. So in an attempt to have not be purely exposed to the Bitcoin thesis, we also think this technology will enable digital securities. And essentially this is basically traditional security with a new wrapper, which makes compliance automated, makes liquidity much higher, reduces trade frictions, all these things. In theory, by the way, this is a very brand new space, it's very small today. But we think over the long haul that essentially everything of value, stocks, bonds, real estate, etc., will be tokenized or digitized as well. So that's kind of our barbell strategy for our firm. We're exposed to the Bitcoin thesis through our fund operations, and we're exposed to the digital securities thesis through our consulting practice.
I see, perfect. And as you said, you were at this bar and you were talking with this guy about, why this is the future. Now, why do you think crypto assets, Bitcoin and blockchain, why did you choose them? Why do you consider crypto assets an asset class? And what draws you to this space over exciting things that are happening in the industry, like artificial intelligence and cannabis and the numerous other things?
Sure. So I'll say at the time, again, this was 14, I was having the argument. My mindset then was that we're just moving into the digital age, and digital solutions have already proven themselves to be exponentially more effective in so many different spaces. And this was a guy who's more of an old school banker type, he's very anti-iPhone, other things like this. We're kind of diametrically opposed. But again, at that time, I hadn't studied Bitcoin very deeply, so I didn't realize its significance. I'm still realizing its significance today. But in the context of monetary history, essentially what has been the norm has been hard money. And people say, well, okay, what is hard money? Hard money, an easy way to think about it is the difficulty of producing an additional unit. Because every time you produce an additional unit, you print another dollar, or you mint another Bitcoin, or find more gold, you're basically diluting the value of all the existing holders of that money, what we commonly call inflation. So essentially, human history has naturally gravitated towards the hardest form of money available to them.
Right.
So that's whatever form of money is most difficult to compromise.
I see.
So it has its value. They say it maintains its saleability across time, which saleability is how much optionality it gives you in the marketplace, right? It can be exchanged for anything else. So throughout all of history, societies have settled on the hardest form of money available to them, which culminated in the gold standard, kind of in the 19th century. This basically reduces trade costs between societies, enables them, it's a lubricant for human exchange. So it encourages free trade, which creates, and enhances aggregate wealth for everyone. The problem was, we had this global gold standard, we had the 19th century, which some people refer to as the Gilded Age, or La Belle Époque in French. There's this period of unprecedented cultural benefit and trade, and it was just a wonderful time, basically. And the problem was gold, specifically, it's very hard money. It's very rare in the Earth's crust, expensive to mine. The problem with it, though, is that it's physicality, right? Which led to vaults basically centralizing it, and eventually issuing notes in excess of their reserves, which got us into fractional reserve banking. And then, fast forward to 1971, we have all monies decoupled from gold entirely. So now we have government fiat money, which is indeed the softest form of money that's ever existed. Literally, there's no cost whatsoever to producing an additional unit.
Right.
And since that time, we've seen rampant inflation worldwide. It's worse in some places more than others, but it's in general, all currencies have been devaluing quickly since we've severed the peg to gold. And so then you kind of fast forward to 2009, and Nakamoto introduces this open source project called Bitcoin to the world. It had this immaculate inception, kind of it just grew serendipitously by itself in the market based on its own merits. And today it's $80 billion in network value. So our lens there is we have the hardest form of money that's ever existed, which is Bitcoin. Has this mathematically fixed supply curve. It's even harder than gold.
Wow.
Its hardness actually reaches a level of infinity in the year 2140 when the last Bitcoin is mined. There's no more flow. So that's the stock to flow ratio, which is the metric that defines hardness, actually approaches infinity.
Wow.
In the 20th century. And we have that competing heads up with the dominant form of money in the world today, which is, the softest form of money the world's ever seen. So take a step back, basically the norm of human history is hard money.
Right.
The last 100 years is the anomaly. And we think we're seeing the reemergence of hard money.
Amazing. Well, thanks a lot, man. I thought it feels like I just had a history lesson, but it's so interesting what you said. And I appreciate you defining what hard money is for those that don't know. One of the things that I wanted to touch on, because you talk about this in your essays, is money being as a social network. I just wanted to understand a little bit about what you mean by that.
Sure. So I think we call money the oldest or original social network. And just meaning that it connects people through time and space, right? It sort of defines many of our relationships, whether they're commercial relationships, even, going into real early history, passing heirlooms, right, from father to son or mother to daughter. This was a form of wealth transfer. So that actually bound the family together. And then we look at it through the lens of essentially as a network grows, its value is defined by the number of possible connections it enables. So, and this is referred to as Metcalfe's law. These are the same type of valuation fundamentals that drive, say, Facebook's valuation.
Okay.
The network effect, right? Everyone wants to be on the platform because everyone else is on it, right? Yeah. This thing, it has a center of gravity or a power law that creates, Facebook is more or less indomitable.
Right.
But not exactly, because they disrupted MySpace, right? It was first. So when we look at the network effects inherent to Facebook, they kind of have one customer cohort. They have the user, right? Whether they're the customer of the product, that's another question. But sort of just one value proposition for one group of people they're providing. When you look at other businesses, like say eBay or Craigslist, they can have a two-sided network effect because they have buyers and sellers on the platform. In order to disrupt a two-sided market like that, you have to introduce a superior value proposition for buyers and sellers simultaneously. Otherwise, nobody moves. So kind of the proof point there is looking at Craigslist. It has pretty limited innovation over the past 25 years, but it's still leveraging an early two-sided lead, so it's still a dominant website. It's much harder to disrupt a network that has multi-sided network effects.
Beautiful. Okay.
So then we look at Bitcoin, and Bitcoin sort of has this unusual four-sided network effect. Where you have consumers paying with it, merchants accepting it, the miners basically that support the distributed ledger, and then you have entrepreneurs building onto and on top of the Bitcoin blockchain. Okay. So that multi-sided network effect really insulates it from competitive disruption. And sorry, the question was more about money and social network. Essentially, more connections means more optionality for exchange, right? Like the US dollar right now is globally dominant. It's accepted most everywhere. So that gives me the most optionality as an individual user of the US dollar. And in an uncertain world, optionality is the best thing you can hope for. So.
Right. Okay, that makes a lot of sense. And you talk a lot about Bitcoin. What would you say exactly makes Bitcoin so special to you as opposed to other crypto assets that are out there?
That's a great question. It's very hard to conceive initially when you're saying, hey, here's an open source project, right? The code's totally viewable to everyone. Anyone can copy it and make their own. How in the world is that not going to just be replicated to infinity? And it turns out, Bitcoin is not just a technology. So to really understand it, you kind of have to go to the beginning of history and understand monetary evolution. And then you also have to look at it as sort of a new form of social contract. I'll try to keep this a little brief, but essentially social contract theory, it starts with this assumed state in the world where everything's awful, right? Total violence, everyone's robbing and killing everyone, and it's just really bad. So people can come together and basically implicitly agree to sacrifice certain freedoms to empower an institution to protect them. Okay. So a government would be an example of this.
Exactly.
Right?
Yeah.
We have laws. We agree not to beat each other up and still, but we empower police and military to sort of protect us and enforce those rules. Money itself is another form of social contract, right?
Right.
A bunch of people in a barter economy. We're tired of exchanging things directly. This is a pain in the ass. I don't have enough apples for your truck or whatever it may be. Let's use a medium of exchange, right? Let's use money. Yeah. So you're sacrificing this freedom of sort of control over your goods, right? You're trusting in whatever that medium of exchange is, whoever controls it. But you're benefiting from the convenience factor.
I see.
Right? Much easier to spend cash than apples, for instance. So Bitcoin has this interesting social contract implementation, we'll call it. That's in two distinct layers. It has the social layer, which is the social consensus itself. And this is what gives money its value, right? Money only has value because we all agree it has value. It's the shared belief, the social network of money that gives it value. I will accept this piece of paper for my work today because I believe that someone else will accept this piece of paper in the future for their work, right? Yeah. That's the whole value of money. So that social layer, the social consensus, sets Bitcoin's values and determines its rules, actually. So basically Nakamoto initially launched this thing with 21 million units will ever exist. This is a rule that benefits holders. It cannot be confiscated because it's information, right? You can store it anywhere you want.
Yeah.
It cannot be censored. You know, it exists outside the law. You don't need anyone's permission to send Bitcoin, receive Bitcoin. It's totally, permissionless, as people say. So that social layer is supported by the protocol layer, which is the Bitcoin network that we know. These rules, it's essentially automating the enforcement of those rules derived at the social layer.
Okay.
So if you were going to successfully fork Bitcoin or compete with it, you have to fork the social layer first. Because if you fork just the protocol, I can go right now and fork Bitcoin and make Bitcoin, and no one else believes it, so it's worthless, right? But so long as that social layer is not forked, which we have seen in the cases like Bitcoin Cash, then Bitcoin exists as one singular monetary network. Right. Now, in the case where you do have a successful fork of the social layer, like Bitcoin Cash, you end up with two new social contracts that are both a little bit weaker than before, right? Yeah. They have less people believing in each of them. But as we've seen, kind of with the abject failure of Bitcoin Cash and it pulling down Bitmain with it, he exhibits this extremely strong winner-take-all dynamic, because at the end of the day, human exchange is a universal phenomenon. If one technology can solve all the problems it's designed to solve, then people naturally and rationally gravitate to that one monetary technology. Interesting. So that's it. Nakamoto was, very ingenious in that he left very little design space for someone to come in and introduce something that could be superior to Bitcoin. Right. So yeah, he's very prescient in that sense. Beautiful.
And on the topic of Bitcoin, I mean, there are so many, perks or so much interesting aspects of Bitcoin, such as decentralization, security, auditability, efficiency. But is there one aspect that you see as particularly important for mass adoption?
Of course, medium of exchange, that's inherent to money, right? And until people are using it every day, it's just not going to get mass awareness or mass adoption. So, we like the Lightning Network in that respect, and these other second layer protocols. And the Lightning Network, for the listeners, is essentially, if Bitcoin's layer 1 protocol, similar to kind of how gold is layer 1 for the existing banking system, you can think of layer 2 as Lightning Network being like banknotes or something like that enables easier movement of value without actually having to move the base layer, which is really expensive. It's really expensive to settle to the Bitcoin blockchain in the same way that it's pretty expensive to move physical gold, right? Right. Using that kind of rough analogy. Right. So Lightning Network basically sacrifices a little bit of trust to increase transaction throughput. So you can open up these trust channels between nodes. And the analogy I heard was, it's kind of almost like an abacus, where you have a bar between you and I, and we're just sliding beads back and forth, essentially. Got it. And whenever we're done, either you choose to close it or I choose to close the channel, it settles to the Bitcoin blockchain. Okay. We're never really at risk. You're holding kind of your Bitcoin in this channel until you decide to settle to the blockchain. So I would say medium of exchange, definitely the number one property for mass adoption, and we think Lightning Network and other higher order protocols will contribute to that.
Beautiful. I think that actually brings me perfectly onto my next question. Now, in your essay, you talk about the perspective that time offers us, right? And what stage would you say that we're at in crypto assets adoption, and how do you see it progressing over the next sort of 5 to 10 years?
Sure. So yeah, we look at time through a couple of lenses. One is the diffusion of innovations curve. Okay. And this is just the path that all emerging technologies take as they mature. And there's I think it's 2.5% are the innovators. Then you have kind of your early adopters. Then it hits an inflection point as you pass, I think, 13.5% adoption. Okay. With things like the smartphone, right? Once, just a rough analogy, say 13% of people have a smartphone, all of a sudden everyone wants one, and it's game over, right? Right. So that's kind of one lens, and we think we're very early with Bitcoin there, probably just entering the early adopter phase. Oh, okay. So we're around 2.5–3% of adoption. Interesting. And then the other thing, and this is very popular, is the Lindy effect. You'll hear people saying this is Lindy or that's Lindy. And essentially the Lindy effect is there's two types of things in the world: perishables and non-perishables. Perishables being like a human being, right? Every day that I age, I sort of have a shorter life expectancy.
Yeah.
But it turns out the opposite is true for technologies, mostly. So just because the wheel has been around for 50,000 years, we don't think it's getting old and going to go away. It's this non-perishable, informational technology that has persisted for millennia and will very likely persist until the end of time.
Yeah.
So in this way, kind of new technologies gain trust over time, and they have a longer life expectancy the older they become. So if you went in the mid-90s and you took a poll, in your local neighborhood, and you asked people, say, hey, do you think the internet is going to be a permanent feature of our lives?
Yeah.
You would probably have received mixed responses. It was very new. People didn't know a lot about websites, and et cetera, et cetera. If you went and did that same poll today, you would resoundingly hear, I think most everyone agrees, the internet's here to stay.
Yeah.
And that's just, a 25-year sort of example there.
Exactly.
We think Bitcoin, there's no indication it's going anywhere. So we think it only becomes harder over time. And we think the more it's in sort of the public consciousness, the more it gains people's trust as a store of value.
Completely. I think that's such an interesting perspective. And it's true. You see it with the internet, you see it with smartphones. It was so new as a concept, maybe 10, 15 years ago. I can't even remember, even if I had one 15 years ago. But now it's I can't imagine my life without a smartphone, right? It's pretty crazy. Now, although we can't promote a specific fund through this podcast, what would you say, what would be your final message to the family office who is considering making an investment within this space, within blockchain or, crypto assets?
Sure. So again, we kind of have a little bit of a contrarian thesis to a lot of crypto asset or blockchain fund managers who pitch a very diversified view. We do believe Bitcoin actually captures most of the value from this entire movement. And I would say to family offices that are considering investing in it, even if you're not familiar with tech or you don't care about Bitcoin or any of this other kind of fancy new shiny object, just look at it as from an alternative investment perspective, in that it's uncorrelated, as we all know, to basically every traditional capital market. It has extremely high volatility at this point in its life cycle, because it's small. It's 80 billion in market cap, competing in $100,000 billion market.
Right.
Market for money, so it's very tiny.
Yeah.
Okay. So with even a small allocation of say 1 to 5% of your portfolio, depending on your objectives, you can dramatically enhance your risk-adjusted returns, a Sharpe ratio. And it's the early adopters that really study this deeply and understand it first benefit disproportionately. I don't know if they have access to the essay, but it's there is a kind of a desperate search going on right now, even in the Bitcoin community, for what are the counter arguments? What are the really sound counter arguments to this? Clearly we're bullish. I know there's a lot of kind of general skepticism about Bitcoin, but when you look at it closely and study it deeply as a new institutional form that it is, it's not just a new magic internet money or anything like that. I think you come to see that it certainly warrants consideration, even if it's just for a small subset of your portfolio.
Beautiful. No, that's a sensible approach. And Rob, thank you so much for that. We really appreciate your time. We thank our family office audience and our partners at the Family Office Networks who are going to be listening in on this. And for those who are interested in learning more, please email info@aXpire.com and check out our weekly Family Office newsletter weekly column. All information will be on there. Rob will try and link the essay as well. I think that will be a tremendous sort of a material to go alongside this podcast. But yeah, look, man, we really appreciate your time, and thank you for the history behind this, and the knowledge that you've shared, man. Really appreciate it.
Thank you so much. We love to share it. So yeah, thanks for having us.
Beautiful. And the last thing I would say, Rob, is if anyone wants to contact you, how do they get in touch with yourself?
Sure. So I'm on Twitter at Breedlove22, which is my last name. It's BREEDLOVE 22. I tweet about a lot of Bitcoin, some philosophy, history, etc. And then I'm also available on our website, parallaxdigital.io.
Cool. Perfect, guys. Well, look, thank you so much. I'll get this shared with our family office network, and we look forward to staying in touch and seeing where this goes.
Awesome. Thanks, man.